with the oil producers now that the rally in crude is clearly stalled here. Prices falling from the low 70s to 65 just a month's time. Still, 65 oil is nothing to sneeze at as long as OPEC doesn't flood the world with new supply and push prices lower still. But if they stay here, what does it mean for the industry? Consider Carrizo Oil Gas. This is a $2.3 billion independent exploration production company that operates in the Permian Basin and the Eagle Ford Shale with some of the lowest costs in the industry. We can hear more about that. Now, when Carrizo reported last quarter, last month, the company just blew away the numbers, plain and simple. And while the stock has pulled back a teeny bit from its recent highs, the darn thing is still up more than 33% year to date. So could Carrizo have more upside even if oil remains stalled, or do we need to be concerned here? Let's take a close look with Chip Johnson, the president and CEO of Carrizo Oil and Gas, find out more about how his company's doing, where it's headed. What a delight. Mr. Johnson, welcome back to Mad Money. Good to see you, sir.
See you, Jim.
Thank you, Chip.
Thank you.
All right, you executed what we can only call the pivot of the year, in that you recognize that maybe there's some traffic jams in Permian, not that Permian's bad, and you went heavy on Eagle Ford, and the difference between the two has made it so Carrizo's having a great year.
No, you're exactly right. We have seen the oil price in Midland drop to about $12 below NYMEX or WTI, and at the same time, the Eagle Ford prices are about $7 or $8 higher than WTI because it's a seaborne crude on the Houston Ship Channel. So it's about a $20 difference. And so we're shifting rigs and frac crews there as fast as we can.
So people should understand that literally, because you have these great Eagle Ford assets, you can make a lot more money than if you just had Permian.
Exactly. I mean, we like the Permian too. We made a big investment there last year, and down the road, the Permian will have more and more drilling locations because it's such a huge hydrocolumn or oil column.
But it's hard to get to market versus Eagle Ford.
It's hard to get there right now because it grew so fast it got ahead of its pipelines. And the pipelines will probably come on in third quarter of 19, but until then, it's going to be a problem.
All right, now, there's a big OPEC meeting at the end of the week, but you have done a lot both to fix your balance sheet and also to be sure that you are not at the vicissitudes of the price of crude, right?
That's right. Now, we've been trying to get our cash flow neutral, where we're not outspending our EBITDA anymore. We're getting closer and closer to that. It'll probably be early 19. We've brought our leverage down to 2.6 times, and that should get down to 2 next year. But we've done a lot of hedging. Last year, when we made the big acquisition in the Permian, we knew we needed to sell some assets to pay for it, but if we had trouble doing that, we wanted to be hedged. So we've hedged our oil and we've hedged the basis. So, for instance, getting the oil from Midland to the Gulf Coast or to Cushing, Oklahoma, we locked in 10 cents, and right now that's $10. So we made a lot of money on that hedge.
So if oil goes to 50, you're okay.
If oil goes to 50, we're okay. And if oil's 50, we'll be getting $57 in the Eagle Ford.
Well, that's what matters. Now, you also understood another issue that I want you to explain to people. It isn't the only liquid you got to worry about. Water. You guys have solved a lot of what people don't realize is a real conundrum.
In the Permian Basin, you make a lot of water. Typically, you'll make 5 barrels of water for every barrel of oil. In the Eagle Ford, it's about 1 to 1, and I think at the Bakken, it's about 1 to 1. So it's probably the most water-rich or water problem oil basin. So right now we're making 3 million barrels a day in the Permian. So we're probably.
So tell me what that means. You're making, because people say, well, water. How can you make water?
When oil comes out, salt water comes out with it, and so that's the problem. And so you have 15 million barrels a day of salt water right now that has to be dealt with, usually re-injected back into briny reservoirs that are deeper than anything else. Or you try to recycle the water. We're experimenting with that now. That would also reduce the need for fresh water for fracking, so that would be another plus.
One of my themes in tonight's show is that we are a country with abundant natural resources. We have a lot of natural gas. We're doing stuff with it, right? It's not just flaring anymore.
No, we're trying to use all this gas, and in the Eagle Ford, we flare almost no gas because we have so many pipes to the Houston Ship Channel, and so we can get rid of that gas and get basically Henry Hub prices for it. In the Permian, though, right now we're getting about $1.40 deduct to Waha prices because you just can't get the gas out of there. So this month we're shipping some gas into Mexico. There have been some new pipelines and several power plants I think Iberdrola put in that are really adding a lot of demand for gas on the west side of Mexico, and now we can get gas there. So.
Does it matter that the Chinese are being tough on us and maybe don't want to accept our oil and gas?
I don't think that really matters. I think we'll sell the oil that we export to Europe if we don't sell it to China, and they'll buy it from somebody else too. So that'll create some inefficiencies, and maybe that's 50 cents or $1 a barrel, but it's not. China's still going to need oil. They're not going to stop.
And how about lowering the cost of drilling? Just give us a sense of what you're doing now, say, versus 5 years ago.
We're probably drilling wells for half of what we spent 5 years ago. We typically in the Eagle Ford can drill a well every 10 days, and we can drill the lateral section of the well almost 5,000 feet per day, which was unheard of when we started doing this in the Barnett Shale 10 years ago. And so we've just got better drilling rigs. All the big drilling companies have these Generation 3 drilling rigs that have all the technology, and we have better drilling bits, and we just have better crews, and it's awesome.
Regulatory environment, does it matter? It's supposed to be better now than under Trump than before?
I think it's better, but we have pulled in. We sold Appalachia and DJ Basin. Right. We're now a Texas company, so that's where you have the least trouble with regulations, partly because you're not in populated areas. So, we dealt with that in Fort Worth when we were drilling in the city up there, and we were able to do it. But it's a lot easier to drill out in the middle of South Texas or West Texas.
Fair enough. Okay, that's Chip Johnson, President and CEO of Carrizo Oil Gas. It's been a big winner, and the company's got a better balance sheet and very low finding costs. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.